Next trade of the week was on ADA, and this was a bit of a more risk on, say, if you will. I'll explain maybe how we could have done things differently, but it still panned out in our direction. So you can see off of this range, I was trading an up range here, which may have not been smart. This is a different frequency than I was trading on, but I was still using this. So my up range here, I have my initial entry here, my limit here, and then limit 2 down here. So price comes down. Unless it's going to sweep this wick, we should have some sort of rebound in price action. So we do get a bit of a rebound in price action. All right, now we have our new take profit at 62.58. All right, this is wrong. Don't pay attention to that. But right now we're up about $2,000 on the position, pushing, trying to break this high here. All right, and then price action does break that high. We're up around $4,000 on the position. And you can see now the price only needs to come up a hair now that our limit 2 is filled. So these positions got closed out separately, but you can see between these two positions, we made right around $4,000 on that trade. Once again, very quick trade. This was a tighter range trade, which is why we got the limit 2 filled. The more limit 2s we're going to have filled, the higher probability that these trades are actually going to get stopped out. So obviously we're trying to use our other technical analysis to make sure that we decrease the chances of us getting stopped out on this trade, because realistically what I should have been trading is probably this trend up and then trying to take longs into this momentum, or once again following this downtrend here where I'm shorting into this trend, so that if we get a big move off of here, we end up getting short into, say, a zone like this, price can come down and now we'd be sitting in profit on this trade currently. But the good thing is with DCA range trading, okay, there is a lot of flexibility. So in this situation, once again, was trading this range here. So we got long our first order here, price came up, back down, filled our second limit, third limit here, and then we were able to take profit here. And once again, this is a great example of the New York Open creating volatility, big volatility push down, sort of giving us that region before we got our bounce back. And then once again, big sell off during the Open of New York. So look for these times for it to be major volatility in crypto, but also keep in mind this can open up opportunity depending on the system that we're trading. So between all of the trades from this week, I was able to have a 100% win rate, which obviously will change. I'll get into the math behind the system in just a second. And I only realistically traded 4 days of the week. So I entered the first trade on the 12th, and then I wrapped up all of the trades on the 15th. And actually, funny enough, I just had a Dogecoin trade filled as well on this for another limit 2 short, and I was able to make the biggest profit so far, $5,600 on this trade. So once again, off of this range, I was able to enter here, set my initial short zone here, limit 1, limit 2, and then we had our stop loss level over here. So off of the price coming up and filling the limit and then coming right back down and getting us out, we were actually able to make right around $5,600. I'll probably put that in a reel or just not include it here because I didn't record the trade. All right, so I'm going to show you a little bit more about how this system works and the way that I'm working right now to be able to gradually take profits out of this system. All right, so this ADA trade is a perfect example of DCAing, or dollar cost averaging, which is the premise behind this system. For dollar cost averaging, let's go over how it actually works and how we can apply it to our trading. Say you buy one coin of a crypto at $10. In order for you to get a $10 profit out of this share price or per unit price has to go up to $20. Okay, that's going to yield you a $10 profit. But say the price of this instrument now drops to $5. Say, for example, you acquire 3 more units of this at $5. Now we can multiply these two together, which is going to give us 15. This is going to give us 10. Now we have 25 divided by 4 is going to give us 625, which is now going to be our new average price. So now we have 4 total units at an average of $6.25. Okay, so now in order to make a $10 profit off of this, instead of this having to double, which was in this scenario, this only now needs to increase to $8.75 per unit for us to make a $10 gain. Okay, and we can keep going down with this process so that you need a smaller and smaller move to make the same amount of profit. Now, as you add to losing positions, this also does increase the risk profile on the trade, which is why you have to be very meticulous about these systems. All right, so just for an example, say we start with $1,000. In this system right now, 76% is pretty reasonable. So you have a 0.22 risk reward ratio and a 50% risk on your account. Most people would think that this is asinine first getting into trading, but if you actually understand statistical probabilities and evaluating data, you'll understand that this is actually effective so long as your win rate is high, which once again comes down to being a disciplined trader. There's no easy magical solution to trading. It's about having disciplined structure and refining your process down and paying attention to the meticulous details. The difference between a successful trader and a not successful trader are very, very small things. Okay, everyone's trading the same patterns, knowing the same thing. The only difference between the professional ones that are actually profitable versus the ones that aren't are how closely you're paying attention to your systems, how diligently are you following the same process over and over to be able to achieve that result that you can then quantify and be able to expand on and have the confidence to know know that if you execute that system, you're going to be able to be profitable over time. All right, and you can see if we drop this, say even down to an 80% win rate with these other parameters, now you're actually losing money over time. So the amount of winning trades that you need to have is really, really important if you're trading with a system like this. Okay, but once again, in these circumstances, we can win 20, 30 trades in a row and be able to gradually be taking funds out of the system. And by the way, guys, if you're new here or you're following along, we're gonna have a lot more formal developments of the system.